Hey, it's Pete. If you've watched thousands of videos on YouTube on stocks and options in the stock market and you just can't seem to get profitable, this is the lesson that you've been waiting for. I'm a veteran stock trader and my partner John Napolitano is a veteran options trader. We have a lot of experience with going through the learning curve and actually getting to the other side of getting profitable. And believe it or not, there are two things that massively profitable stock traders and options traders completely avoid. They never do these two things. And that's why they're consistently profitable. Enjoy this video, invest the full time, take good notes, go over one more time. And if you have any comments after the video, leave a comment below. We'd love to get back to you. I want to transition into when members are in our community for a while, specifically over a couple of years, we end up having one-on-one sessions. And these are very valuable to me because it's somebody who's been in our community for a while. And I obsess over the difference between helping somebody by teaching them and helping them actually get paid, for lack of a better way of putting it. And I had one this week that I thought was really interesting, which I think a lot of people can relate to. And I want to address it a little bit today because, in my opinion, when you learn to lose less, you get closer to profitability quicker because you're not digging back out of a hole. And then universally, especially somebody who's been in the community for a while, almost everyone says it's easy to make money when it's obvious. You're getting follow through, you know what you're looking for and whatnot. But I want to share two things from a call this week and maybe get some of your feedback, and maybe some feedback from the community. And ironically, I was talking to Robin about this morning over coffee. She speaks like a trader now, never did anything ever in her life, but she has all the language down. So this is really for everybody in the community. Maybe see if John has the same insight from the options side. There's a universal problem. That's probably about as strong of a word as I could put, that experienced or knowledgeable traders have that prevents them from getting profitable. And it was really emphasized again on the call this week. And this is really important for everybody, by the way. Number one is blowing stop losses. And number two is taking trades that you know are not good trades, but justifying them with smaller share size or coming up with some reason to take the trade. So I just want to say that very clearly, because this could be dramatic for the right person, hopefully for everybody on the call. The two biggest reasons smart traders don't succeed is, number one, blowing stop losses, which means you don't accept risk. And number two is taking trades that you know are not good ideas. That's $1 million feedback from the community and from my 24 years. John, how do you feel about that?
I think risk management is first and foremost. You know what I mean? So I think stop losses could take many forms and many shapes, especially in the options space. So sometimes a stop might be a simple percentage of your premium. Sometimes a stop can be based on the underlying stock. You place a contingent stop. And sizing itself, if you're going into a speculative earnings situation, you have to size correctly. And your stop might be 100% of your premium. That might be your stop. You're willing to lose the whole thing. So those are the things you have to have ahead of time. When you set up every trade, the first thing you have to think of is how much risk per unit am I taking and how much is acceptable to me. That's number one. Then obviously portfolio risk. How many trades do I have out there at once that could potentially go wrong at the same time? A lot of traders don't think of that. They're so fixated on maybe having a stop loss for one of their trades that they don't realize what their overall portfolio risk is, because they might have 10 trades on at once. That's another thing you have to consider. And that's where it gets a little trickier, because then you got to think of correlations and what are some of the gains in your trades and what could possibly go wrong. And that's when you get into hedging strategies, right? Where it's a little more advanced. That's number two. And then number three, what you said about what is a good idea. And so that's what we talk about, building our edge, right? Building the edge is so important, because how good of an idea this is. If I don't think it's a good idea, I'm not going to take it. If I can't come up with a really good justification for getting into a trade, I'm not going to do it. I'll pass. So learning how to pass on ideas and doing nothing is what separates, I think, a professional from someone who's just throwing stuff on and seeing what happens.
Yeah, I think the interesting thing is people know they're not a good idea and take it anyway. Do you have any insights on why that might happen?
There's a psychological component to that. So you have to dig really deep sometimes to be a trader. This is a psychology game too.
Yeah.
I don't think people realize just how your personality and how your past experiences, your childhood, I'm getting Freudian on you guys. It really affects the way you look at things. You know what I mean? My parents are ultra conservative in the sense that my mother was a school teacher, right? My father worked for the city of New York. Super conservative jobs. They got pensions. That doesn't exist anymore these days half the time. So that's how I was raised. Save your money, work a 9-to-5 job, get a pension, get benefits, blah, blah, blah. Me, I did a complete 360. I chose a career that's completely the opposite of that. So I catch a lot of crap from my parents about what I do for a living, and I had to prove them wrong. So that's where I was coming from. So getting into psychology, like that affects the way you make decisions. So I hear my dad's voice in my head when I put on a trade sometimes. Like it's really psychological. So you have to know yourself. We're all probably, I don't know how old the audience is here, but I'm assuming everybody's obviously adults, but we're middle-aged, right? We're not going to change. We can make good habits. We could change certain habits about ourselves, but our personalities aren't going to change. So what we have to do is know who we are and be able to put little bumpers in place, individual too. So me, I'm a little bit of an extrovert. I tend to overtrade. I also have a little bit, because of all the criticism I got as a child from my parents, I tend to be I listen to too many people too much. I'll be a news junkie. I used to be a news junkie when I first started trading. I used to believe the talking heads and the experts over my own analysis because I didn't think I was smart enough. So all of that goes into who you are and the risk management decisions that you make. So you got to get pretty deep. You got to do a little bit of introspection and learn how to put your own bumpers in place. Now, what do? I limit the amount of trading that I do. I try to not trade all day long, right? Which I know you've done too over the past. Yeah. That's one way to eliminate my personality out of the equation. You know what I mean? Now, if you're an introvert, let's say you're super analytical, for all you engineers and accountants out there, right? You have to be a little bit more analysis paralysis, right? Sometimes you have to take that leap of faith. You have to take that chance and realize that this is what it's all about. It's all about taking risk. Instead of being right all the time, you have to just make calculated risks constantly. So everybody's different. Everybody's going to be different. So the way to really beat this is to know yourself on top of having the risk management in place and to have all that stuff, have all the rules in place as well.
One of the things that I said on the call this week, getting to the point where fear of missing out came out to part of the conversation and why this particular person was overtrading, and admitting that majority of those ideas were not necessarily great ideas. I want to bring it back because there's one thing for all of us to have a lot of knowledge. There's another thing to say I took action on it and I'm actually making money. And what I said to this particular gentleman, I don't necessarily need to call his name out right now. I said, what it comes down to is when you acknowledge the problem, and I got even more specific. I said, so we can agree that those trades are the reason you're not getting paid, because you could make money when it's obvious and you throw all these other garbage trades in there. And those are really the reasons why you're floating above or below break even. I said, if you could admit that and get to the point, we say, that's why you're not getting paid. You have to then take action and say, do I really want this? Am I more concerned with actually being profitable or being active? And for me, that was an epiphany for me. That was like the light shined through the roof. Yeah. And it was one of those things. It was like the problem. Now you have to make a decision. How bad do you actually want it? Because you have to fix it.
I had a lot of those problems in my early trading as well. I tried to take on every single trade because, again, I didn't know which trade was a good idea, which was a quality idea versus which one was just an okay idea. I had to learn a process for separating those. And again, trying to get approval from my family for doing what I was doing, that made me want to take every single trade and prove them wrong. And so again, from a risk management standpoint, that's dangerous because now I'm holding on to losers for too long because I want to be right and not profitable. There's a big difference between trying to be right all the time and being profitable. As a trader, you are going to be wrong probably 50% of the time, maybe even more sometimes, right? Yeah. You might get a hot streak where you're right maybe 60% of the time, and then you're crushing it. You know what I mean? So be used to being wrong. And it's not about being wrong. It's just about the trade did not do what you thought it was going to do. End of story. You didn't do anything wrong. Your analysis wasn't incorrect. It just didn't go the way it was supposed to, that you thought it was going to go.
Actually, I have a funny story about family. I remember vividly when I first started trading, so now we're talking about 24 years ago. At Thanksgiving, my cousin, actually, who's my age, said to me, "Oh man, I wish I could, as you, I wish I could do that, like that kind of thing." And this is when I was first trading. I was getting my head beat in, and sitting at the Thanksgiving table, and everybody's talking about time off and vacation and looking forward to their bonuses and whatnot. And I was crazy enough to quit my family business and become a trader. And I was like, "Really? You could finish a 20-day work week and owe somebody $4,000? That's really what you'd like to have right now?" I was so angry. I walked out of the room, but I was just learning. I didn't know any better.
So frustrating. Yeah, those early days are very frustrating. And I've seen many traders just, it is psychologically, it could be a soul sucking job if you let it get to you. You have to just be don't take it personally. The market does not care who you are. The stock market, for good, for better or for worse, the stock market has no idea how rich you are, how poor you are, who you are, where you're from, what your family is, what your personal situation is. So you have to attack the stock market. And that's why we do these game plan meetings, like just to try to assess what's happening and have a plan for the week. And if it works out, great. If it doesn't, we know what to do there too. We know how to manage risk. And that's what it comes down to.
So to get through that learning curve, whether you're, again, and I consider somebody a new trader, I don't care if you're trading for 10 years, if you're not profitable yet, you still haven't learned. So I don't care how long you've been in front of a computer. I feel pretty strongly about that, because you could know everything, and if you're not making money yet, there's something missing. So you still haven't figured it out. Number one is you need to trade to learn how to trade. There's no other way to put it. You have to actually get in there, mix it up. And a big problem that I see is people start out with, and I understand this, they start out with, I want to make money, I want to make money, I want to make money, but they focus on the result and not the process that's producing that money in the first place, which makes it very hard to truly gauge whether what you're doing will work over time, because you focused on the short-term results and not actually whether or not you're putting together pieces and paying attention to what's working or what's not working to get you the end result.
The money is a byproduct of a good process. That's what I like to tell people. So forget about it. The money shows up, and that's not me just not caring or being cavalier about it. If you have a process in place that's consistent, the money is the byproduct of that. So that's really what it costs. So if you're not profitable and you've been doing it for a long time, you have to really look at your process and decide, okay, what am I doing wrong? Am I holding on to my losers for too long? Am I not letting my winners run? Am I trading too much? Am I overtrading? Am I undertrading? What's going on here? Am I trading the same stuff every single week? Or am I really following my sector analysis? Figure it out. And once you figure that out, then it starts to trickle down.